I found a simple scalping strategy that made me 1,765% profit, and in this video I am gonna teach you exactly how I did it. And to prove this is not just talk, I am gonna backtest it 200 times and show you the real numbers like win rate, drawdown, and profit factor. Without any further ado, let's get into it. First step is to load up TradingView and choose what forex pair or other security you want to trade. For this video I will use GBP USD on the 5-minute timeframe, but this strategy can work on any security you will use. Now click on the Indicators tab and search for Twin Range Filter. Choose this one by Colin MCK. The default settings will work for us, so no need to change anything. This indicator will be our entry signal, so when it prints a long we buy and when it prints a short we sell. Pretty simple. Now go back to the Indicators tab and type in MACD and click on this one that says Moving Average Convergence Divergence. We need to change the settings of this indicator by clicking right here. In the Style section, change the first two colors to basic green, and change the bottom two to basic red. Then disable the MACD line as well as the signal line. After that, click OK. We will use this indicator to identify short-term trends in the market, so when the indicator is green it's considered a short-term uptrend, so we would only be looking to take long trades. And when it's red it's considered a short-term downtrend, so we would only look for short trades. Now for the last indicator we are gonna search for market bias. Click on this one by Professor X. Again we need to access the indicator settings by clicking right here. In the input section, change the period to 60, and also change the smoothing to 10. In the Style tab, uncheck this box. Now change the opacity to 30 on every color under plot's background and click OK. We will use this indicator to identify the overall trend, so again if it's green we take long trades and if it's red we take short trades. Now let's go over the conditions for this strategy. First, the market bias indicator needs to be colored green to indicate an overall bullish trend. Second, the MACD also needs to be colored green to indicate a short-term bullish trend. And the last condition is that the twin range filter needs to print a long signal. All these conditions are met right here, so we enter a long trade. We are gonna put the stop loss under the most recent swing low. In this case it's this one right here. We are gonna set the profit target at 1.5 times the risk. We let this trade run and as you can see it hit the target. Now here is another example. Here we see the market bias indicator was colored green as well as the MACD indicator, and the twin range filter also printed a long signal, so we enter a trade right here. Again set the stop loss at the most recent swing low, which would be this one. And for the take profit we will set it at 1.5 times the risk. And the target was hit again. Here's an example for a short trade. You basically just do the opposite of what you do for a long trade. So first, the market bias indicator should be colored red to indicate an overall bearish trend. The MACD indicator also needs to be colored red to indicate a short-term bearish trend. And last but not least, the twin range filter needs to print a short signal. All the conditions were met on this candle, so we enter a short trade here. We will set the stop loss at the most recent swing high, which is this one. For the take profit we will set it at 1.5 times the risk. And we let the trade play out. Here's another example of a short trade. As you can see, the market bias indicator was colored red and the MACD indicator was also red. The twin range filter also issued a short signal, so we would enter a short trade right here. Set the stop loss at the most recent swing high right here. And set the target at 1.5 times the risk. As you can see, the target was met again. Now for the million-dollar question, how does this strategy perform in different market conditions over a long period of time? Well, to answer that, I am gonna backtest it on 200 trades. I am going to use the 1 to 1.5 risk to reward ratio, and the starting balance will be set at $1,000, of which I am going to be risking 2% on every trade. So let's dive right in. And after 200 trades, here are the results. The win rate was at 70%, while the overall gain on the account was 1,765%. It had an amazing profit factor of 3.5 and 6 consecutive wins against 4 consecutive losses. And the drawdown was only 7.7%. If you would like to use this backtesting software, you can try a 7-day free trial by clicking the link in the description. But still keep in mind that this backtest was done very objectively, so the strategy can still be improved if you use some of your skill and experience. So overall, this strategy performed very good, and I think you should give it a try, but remember to always trade with paper money first before doing any live trading. If you found this video useful, I would appreciate a like and maybe a subscribe. Thanks for watching and see you next time.